Jim, what are you expecting out of JP Morgan's quarter tomorrow morning?
I think JP Morgan is going to once again distinguish itself as being a company that is growing. They're going to talk about growth in loans. They're going to say that even though net interest margin is not that great, they're going to be able to say, look, our revenue line's going up. I also think that they're going to challenge some of the banking conventions, saying, listen, we're not going to, we think the rules are silly. They put us at a disadvantage. And I think JP Morgan, Jamie Dimon is going to say, look, we're indifferent to what happens in Europe. We don't want it to be catastrophic, but we are really not going to get hurt on an earnings basis. And all that I think is going to be fine. I just say fine because the stock has now run again, and because I think that the group overall is still always going to trade on net interest margin. And Ben Bernanke is challenging them on net interest margin by keeping this yield curve the way it is. And then the group is going to trade on fees. And we saw from Bank of America's $5 fee, which they introduced for checking, is just horrible.
I think Chase has like $3.
Yeah, it's just horrible because what's happened is that the president immediately talks about it and Senator Durbin immediately talks about it. The way that the banks have always been able to offset net interest margin is to try to figure out a way to be able to make it so that they make money on some sort of fee. They're now under such scrutiny they can't even do that. So, the group is going to remain revenue challenged, and I think that the stocks have run up in advance. Bank of America upgrades Wells Fargo today. Wells Fargo looks like it's breaking out to people, but they have a mortgage issue. They keep claiming that it's all behind them. People are starting to believe that. If it's true, Wells Fargo can go to 28. But if you look at the universe of stocks that can really run here, the financials are going to be challenged into the end of the year, and I still think that they're not the place to be.
So if you already are stuck with JP Morgan, say now, do you want to be selling on the rally into the quarter and then just be really careful with what happens right after? Because the expectation game?
I think that's a good idea. I think it's a good idea. One of the things, just like Alcoa has been disappointed. One of the patterns that we've seen, and I don't think it's going to change, Alex, is JP Morgan reports a good quarter, people bid up the banks, and then the rest of the banks fail to meet the expectations, although Wells tells a good story. And so therefore, into this ramp, you lighten up on what you have. I like USB.
Right, so you want to go maybe like more of the credit cards, more of the regional banks?
Look, this mortgage putback issue is just dreadful.
Right.
And the fact that the housing crisis has not been solved and no one's in the government has been able to effectively harness Ben Bernanke's lower rates, which was meant to be able to refinance, is dreadful. And those are what controls bank stocks.
All right, thanks, Jim. I appreciate it. And for more of Jim's stock picks, you can go to cramerspicks.com.